The common mentality was, well, we're not going to jack it up to 4.5%, 5% because it's going to flatten the economy. Well, here we are now, and the thing that frightens me is how many people got involved in these, variable mortgages and variable mortgage with a trigger rate where they were paying such low amount of money on a mortgage, and now they're at something different. Let's say if they were paying 1.5% to 2%, are they paying 4.5% to 5% now, and how does it affect their rate and affordability? Hey guys, Steve Zellenardo here with Remax West Zellenardo Associates. The Bank of Canada did raise their overnight lending rate at 75 basis points. And I was asked the question, how's this going to affect them in this situation? And it can affect them in a few different ways. Number one, as the interest rates rise, your property values go down. That's just a natural reaction to that. So interest rise, affordability gets taken out of the market. Buyers are not able to afford your property. They're sitting here, you're sitting here, you're going to have to adjust the price until you meet your buyer. It's equilibrium, economics 101. Not to mention, I was just chatting some colleagues regarding the interest rates and how people kind of got into mortgages. And so there's two types of variable mortgages, and I don't do variable very often, or actually never. Usually I always lock into a low rate and I kind of set it and forget it. I don't want to worry about it. And that, obviously, when we sold our primary residence just prior to that, we locked in for 5 years at 2.12%. So I knew that property was going to be safe for 5 years. Then we have another rental property that's on a variable rate, and this variable rate just rises with the market. So currently right now, I believe we're paying $24.50 per month, and it was started at $19.50. So every interest rate hike, it's actually affecting the amount of money. But still, the principal is the same. So obviously, interest, we're paying the premium on interest, but at least we're paying the principal down the same factor. And the only reason, like caveat, why I went into a variable and why I didn't lock in this property, because we were subdividing the rear lots off the property, and obviously we want to do this and not tell the bank until they needed to know the situation, because the bank's lending you money on a piece of property that you put in whole, and if we're chopping off land off the back, they can pull the mortgage at any time. So we didn't want to tell them anything, and if we did go into an infringement with contract, at least we're in a variable, we could have broke it and then brought it to somewhere else. So this is why we kept it variable. But the problem is, obviously, it took us about 12 months to get this property surveyed and cut up, and by that time, obviously, interest rates have changed, and we're in this current situation. So we're still stuck in a variable, and what do we do? We're at 4.6% now. Do we stick that into a 1 or 2 year fixed, or do we just hang tight and let it roll? And currently, we're letting it rolling, because we're at 4.6% paying on the interest rate right now. After today, I don't know. It would be a 5% potentially, but we have a feeling that we're not going to have any more interest rate hikes going into the rest of the year, and then maybe a few more going into next year, but very smaller ones. So we're at the tail end of this interest rate hike, because let's face it, the market's in a situation where it's not going to come out as what people thought in the past. This is going to be a deep dive recession. People are going to have to look at how they're spending money going forward. And the other interest rate, I was just told today, I wasn't even aware of it, because like I said, I always lock into rates, is a interest rate where you commit to one rate, and then at some point they call it a trigger rate. So once you reach a certain amount of interest, let's say 4.5%, then it triggers in the bank, they renegotiate your payment, and you go from there. So I'm not sure at that trigger rate if it goes to prime rate, or there's some escalation between, let's say if you're paying 2%, does it go to 3%, or does it go right to prime? So I'm not sure how that incrementally goes. I'm actually going to look into that, because that's a very dangerous situation, because I think a lot of people looked at the rates and said, wow, the Bank of Canada nor the government wants to see a recession. This was the common conversation I had with colleagues, friends, and other real estate investors, where it's like, they won't do that. They don't want to, jack the economy, and they don't want to, it's too much risk, and, why would they not want people to spend money, and the economy's going to look bad for politics. But deep down, I had a feeling that this was going to happen, so I kind of, battened down the hatches quite early. And just going back to this rate, so if they're lock into 1.45%, the common mentality was, well, we're not going to jack it up to 4.5%, 5% because it's going to flatten the economy. Well, here we are now, and the thing that frightens me is how many people got involved in these variable mortgages and variable mortgage with a trigger rate, where they were paying such low amount of money on a mortgage, and now they're at something different. Let's say if they were paying 1.5% to 2%, are they paying 4.5% to 5% now, and how does it affect their rate and affordability? I would imagine these were very popular in the last year and a half, when all this inflation took off. The problem is, when you're only paying 1.5% to 2% on your rate, you're enjoying either your passive income or you're just enjoying the low rates. You're not putting additional money aside for a rainy day. So whatever the savings you had with this low rate, where did that money go? And that's just the huge issue we're going to run into. And this is why I feel like recession is inevitable, because of affordability. If you're on a fixed income, I mean, the people that I work with, the people that I work for are all the general public. We're hardworking people, fixed incomes, family, and any dollar going the other way hurts their bottom line and affects the way they live. I think we need to be in touch with reality, even politicians and government, because they don't know how that's going to affect the common good of our society going forward. But obviously we're here, and it is what it is. We're going to face whatever it is. Hey guys, if you like these videos, please like, share, and subscribe. A little bit of a sober moment right now, but ultimately, if you have any questions on the market, you can always reach out to me direct. Have a great day.